The markets that we should this time of the day, see what's happening. And I'm gonna start out with the euro versus the USD. Okay, so let's get the charts up. Well, really, what's been really busy though is actually cryptos. They're on fire, so we're gonna talk a bit about that as well. But we're gonna begin with the general market overview. So this is the euro. So we reached the original entry point here, and this would be the way the market's reacting now. It looks like it wants to head lower. It can, of course, just shoot up, right? But it's up to you really how you want to deal with it. But as you might remember, we said look to buy here for this to go up, which it did, and then it went down again. The idea was to go up, which it did not. Instead, it fell. Now pretty much back at entry, and we have the opportunity to close out this position. If you don't want to micromanage, the overall trend is bullish, and there's no real reason to make any changes. But you know, sometimes when the market gives you the opportunity to be let off the hook like this, then I do like to take it. And I do think if we go down to 111.01, then that might be an opportunity to get involved again here, as I mentioned yesterday, and then turn bullish from there. GBP versus the USD is under pressure this morning, and we're very close to the trend defining level. So what I did here is that first we had trend defining level up here, and then we'd reduce it, as you might remember. And the reason for reducing it is to get a better risk reward ratio. So you have a tighter stop loss, take profit, you leave the same. That way you effectively get a better risk reward ratio. But sometimes when you push it too much, you get it comes back and haunts you. And this is exactly what's happening here. Market's really close to the trend defining level. And if one did get involved here, then it's better just to leave it the way it is. If one is not involved, then just keep an eye on 129. I think above that level, the market may still bounce upwards to 130.75, and then we'll see if it wants to go higher. Dollar versus the Japanese yen is interesting because we were stuck within this interval, this rectangle. We just had a bullish breakout just a few days ago. We did have a bearish break down, but now we're having a bullish one. And you know, with stock markets being upbeat and Nasdaq 100 reaching new all-time highs almost every other day, this is trading upwards. I think now if you take fib from the very low to the very high, then first fib, that will be interesting to get involved. The alternative, if you know what you're doing and you want to be scalping, then just allow it to go down to 109.72 and maybe just using a stop at 109.15 might be a better option, because sometimes what happens is that you get the breakout and the market does not look back. This is the price of gold, and gold it was very, very bullish, and now the market is down, up, and then down, and the trend remains bearish below 1563.35, right? And this is a short-term correction. I think this can continue to maybe 1513 or maybe 1517. And for now, remain bearish below 1563.35. So no reason to make any changes here. And this is crude oil prices. So crude oil prices are under pressure, and the price went into the buy zone, and it's now challenging. It's just at this trend line here, and as long as trade about 56.98. As long as trade about 56.98, the trend is going to remain bullish, and the market can potentially bottom out here. But obviously it's under some challenge. Let me show you an alternative interpretation, which is a bit different. So this is just using an Anders pitchfork, and we take into account data from May, and you can see here that this channel has done a relatively good job explaining the price action. And we reached the median line, and the market could have bounced from here. Sometimes it will just bounce from here, but clearly this level did not necessarily hold, and sort of the next support level according to the pitchfork is 56.67. so if one is not in the market, I would probably give this bit of allow it to move down lower, and then maybe from something like 56.51 potentially looking to get involved. with stops below here. The alternative would be if one is already in position, it's just focus on the short-term blue charts. Sometimes they do good, sometimes they don't. The system did very good, projecting that we're gonna rise from these levels. We also talked about buying here. We talked about buying here. I don't remember about this section here, but now, and we talked as well about buying here. But sometimes at the end, sometimes of a trend, we get stopped out. This is the German DAX, and German DAX is very interesting as well. I mean, there's quite a lot of markets here that are bullish, and stock markets in particular, really, they're going upwards. And yesterday we did an update on the Australian stock market. That's something I can recommend you to check out. Nicholas did a few updates on those. And there's very strong similarities between the Aussie stock market right now and the German DAX. Let me just show you. This is the Aussie stock market. And the Aussie stock market was trading within a rectangle like that, and now you just had a breakout. You had a breakout and then a correction, and then you took out that high. So in the Aussie stock market, what I would have done here when I told my clients a few days ago, yesterday already, was to buy here and put stop losses down here. I told them that, and I told them something similar as well about the German DAX. By the way, this is the rectangle, so to some extent, even if you want to tighten it, you can tighten it up like that a bit, and then you get that sort of profit target. So as you can see here, it's looking really interesting. Now with the German DAX, it's a very similar situation. So you have a rectangle where you had a bullish breakout. The market did not manage to actually take out as high instead of going lower, and it's perfectly fine to buy a dip, first fib or 50 fib. As long as you're above 12,949, this is going to be a bullish trend. And then the alternative would be if it takes out this high. And I think that's maybe the next thing that may happen here. We take out the high and the market resumes its uptrend. So it's exciting. The stock market is really what we're focusing on. There are, of course, some stuff in currencies as well, if you know what you're doing. But sort of the easier trades right now in stocks. About the S&P 500, as you can see, it's really just bullish. And the market here is in a situation where the market is just leaving us behind. And unless we sort of move really close to the price action, there's a risk here that we lose out. So the problem when you are too close to the price action is that some bad news comes and the whole thing just sort of collapses on you. And then you would have wished that you bought at lower levels. But this is the short-term level, so potentially if we spike down to today's levels, actually going to push us down a bit like that, then that makes an interesting case. And as long as you're about 3,253, then that's bullish. The alternative would be that we have a stronger decline, and then maybe down here somewhere potentially looking to get involved. So that's two different scenarios here. There's no right or wrong. Both are good. I prefer though the steeper pullback, because the steeper pullbacks are more trustworthy to trade than the short-term levels here. Okay, let's see if you guys have any questions. We have Maurizio, we have Antonio, and we have Marvin. Good morning, guys. I hope you're good, and thanks so much for joining me this morning. Let me know if you have any questions. And before I forget, let's take a look a bit of at cryptos. So the crypto markets are on fire. I was looking at Dash. Dash has doubled, so done 100% return in the last 14 days of in the last few days, not 14, say the last 3 weeks. Litecoin and all this is literally on fire, so it's double-digit return. And you might say, well, I don't really want to trade cryptos, and I understand that it's high risk, and it is definitely high risk. But nothing says that you can't put a few thousands into this, you know, and then I don't know, 5% of the portfolio or whatever you have to manage to trade this. So right now I can't necessarily, we would need to go through, but this is Bitcoin, for example. We had a very good pullback. I think we talked about this one. So we had a little nice pullback, but let's see what happens. I like Ripple as well, you know, like, you know, if we take out something like 22,000 or 22 cents and 59, then that could be something. And you have a few things here that cryptos in general are quite interesting because of the you don't have to use leverage. So this is 64% return. So the idea is you just look at the markets. For example, Lumen here is clearly lagging behind. Lumen trading at 5 cents per coin, but that could potentially catch up at one point. IOTA, this is another one. Tron was supposed to be sort of the big solution to a lot of things, but you can see it hasn't really moved too much yet. So there's some interesting stuff here. So I would definitely check this out. This is Dash. I was trading at 38 cents. On January 3rd, it was trading at 39 cents. I reached a high now today, and with that high included, it was 110% per turn. And then you got Ripple, which we already talked about. So yeah, it's looking encouraging. And the way I look at it is like this. I will look at it like this. I traded some of this in here actually in the end of 2017, and I put some money in Bitcoin Cash. I doubled that position. I put some money into Ripple, that doubled, and that's just in December. Because all the technical breakouts that we're working with when the market is really bullish, they work really good. So what's interesting is that I put some money aside, that into this money that if I would lose, wouldn't be fun to lose, but it wouldn't be hurting me. And with that money, I was just speculating with that. And so what I did is I sort of put aside like normal risk reward ratios. I mean, I still did some risk reward ratio analysis and technical analysis, but it was mostly like put 25% of my money into a coin, because when you traded, especially if you traded on an online wallet, you can actually keep it forever. So you don't pay any rollover, you don't pay any extra stuff, you can just hold it. So if I was thinking if it really goes bad, then I will probably be able to hold it forever. Of course, if I would have held it forever, I would be crying. I know some people that held forever, but to give you an idea, like Ripple, I sold it I think around $2 or something like that. So $2 per coin. Of course, if I would have held on to Ripple, I would have lost like 90% of my money. So obviously I wouldn't like that. But the idea is that if you do get it wrong, you can hold on to them technically for as long as you want, as long as the money, the wallet, online wallet, or the wallet sort of lasts. Anyway, long story short, what I was doing is I put like 25% of my money into one coin. If that coin showed me some profits, I will buy more of that coin, and then I would sort of limit myself to 50%, and then I would put money into another coin. So I had a little bit of diversification. Of course, if you just look at this, you can see, you can't see actually, but everything is either green or everything is either like everything is either green or everything is red most of the time. So yeah, so it's an interesting thing to trade, and because the returns are so crazy, it does actually could potentially make a big impact on the money you make. And yeah, I don't necessarily believe in the concept of some of these coins. I don't believe people gonna necessarily be using them. I mean, they're not using them. We know that for a fact. So I wouldn't believe in the idea of buy and hold and then see in 40 years. I think there's more effective ways of dealing with these assets. However, I just want to keep it long enough before it comes down. And when it does come down, it does come down quickly. I mean, this is the daily chart. At one point, coin here, this is Ripple. It lost about 32% of your money. But again, if you start well, you buy some, it goes good, you buy a bit more, and then you try to get out, then it makes a lot of sense. Okay, I'm gonna wrap things up. Guys, thanks so much for watching. I'll be back tomorrow, same time here on Investing Cube's channel. Don't forget, we have a newsletter here. You can see it here to your right, and it's quite straightforward. You sign up to that one, and you get our morning update this one, the market brief as well. What happens is that if you become a member of the site and you want to read something like the ATFX report, then you get automatically added to the newsletter as well. So you will get updates included. Okay, guys, thanks so much for watching, and I'll see you guys tomorrow, same time here on investingcube.com and on the ATFX YouTube channel. Thank you, and bye-bye. Cheers.